Why is the pound crashing? On Monday this week, the pound dropped by more than 4% to an all-time low of $1.03. So in this video, I'm going to answer the question, why is the pound crashing? And what does a weak pound mean for you and your portfolio and for the wider economy? And for those of you across the pond in the US, it doesn't just affect us Brits because the US dollar is skyrocketing, so it's worth you sticking around to find out what that means for you also. Obviously, this is a very fast moving situation, so while I answer the question of why is the pound crashing, there is a possibility this information may have moved forward. So this information is correct as of 5 p.m. on the 28th of September. So why is the pound crashing? So like the rest of the world, the UK is currently facing high inflation, currently at 9.9% in the UK. In the past few weeks, Liz Truss was made Prime Minister and she assigned Kwasi Karteng as Chancellor of the Exchequer, which is basically the government's chief financial minister. So while inflation is sky high, Kwasi Karteng decided that Friday of last week was the perfect time to announce the biggest package of tax cuts in 50 years in his not-so-mini budget. Kwasi believes that high tax rates damage Britain's competitiveness, reducing the incentive to work and for businesses to invest, and he said that cutting taxes was the answer to kickstarting economic growth. So in this mini budget, he laid out £45 billion in tax cuts, but to provide these tax cuts, the government is going to have to go into more debt. So after this announcement, investors and traders started selling the pound and government gilts in favour of the US dollar, because investors are worried that some of these tax cuts aren't going to be fully funded and aren't sustainable. This drop in the pound was amplified even further on Monday by Mr. Karteng's comments made on the Sunday Politics show, suggesting his Friday announcement was just the start. The ridiculous thing about this is that the reason we are currently facing this high inflation is because of the availability of free money, which in turn causes an increase in spending and so driving up prices. So the last thing you want to do is cut taxes and give people more money to spend in an inflationary environment. Instead, you should be doing the opposite, which is why central banks like the Bank of England, who are the equivalent of the Fed in the US, are increasing rates to make saving more attractive and also trying to reduce the money supply. Liz Truss is a fan of trickle-down economics, which has been likened to that of Ronald Reagan and Margaret Thatcher, which is really good for boosting business growth. However, when Ronald Reagan employed this in the 80s, it was after Paul Volcker had already raised interest rates by 20% in order to fight inflation. It wasn't done at the same time as the peak inflation, and so instead this is likely to push inflation even higher. Liz Truss's critics are saying she is gambling with the UK economy, and as she hasn't been voted in through a general election, she may be trying to boost her popularity for the next general election, although apparently MPs are already sending letters of no confidence over fears she will crash the economy. So time will tell if she even makes it that far. In order to pay for these tax cuts, the government will have to introduce more bonds, and this gets added onto the national debt, which will have to eventually be paid back. The larger the national debt gets, the more interest the government has to pay on all the bonds it has sold. Until recently, the government was able to borrow very cheaply at rates of less than 1%. But interest rates have been going up, and so has the government's interest bill. The interest on 10-year bonds has risen from 3.83% on Friday to 4.11% on Monday. The falling pound just made the cost of UK government borrowing a lot higher. The yields on the UK 2, 5 and 10-year gilts all surged massively on Monday to their highest level in over a decade. Yields measure the interest rate on bonds, so when these jump, it means that the cost of borrowing has just got more expensive, which is obviously bad news for a government that is just about to borrow a load of money. So this is causing an issue between the government and the Bank of England. So it's the Bank of England's job to bring down inflation by raising interest rates. But the government is doing the opposite and providing liquidity at a time when they should be reducing liquidity. So because of this, the pound has tanked. And the Bank of England has said they're going to keep raising rates no matter what until they bring down inflation. And because of this, lots of analysts are saying the pound may reach parity with the dollar, which means $1 would equal one Great British pound, or perhaps even worse. The Bank of England only just raised interest rates last week and isn't set to hold its next interest rate meeting until November. They have said they do not plan to raise interest rates before then. But as of today, Wednesday, the Bank of England has stepped in to calm markets, saying they will be buying government bonds at an urgent pace to help restore orderly market conditions. As there have been concerns over whether the government's plan will work, investors have been demanding much higher interest rates to lend to the UK government. But the bank now hopes to lower these prices by buying the government bonds. Since this announcement, the government's long-term borrowing costs have fallen, although they still remain high. The bank has also had to postpone the planned start of a gilt sale programme that was only announced last week. Karteng doesn't intend to reverse his tax-cutting plan, but due to the increased cost of borrowing, it is difficult to see how this will work while sticking to his original estimations. Even the International Monetary Fund has criticised the new tax cuts, calling them excessive and in need of revision, and stated Kwasi should consider ways to provide support that is more targeted and re-evaluate the tax measures, especially those that benefit high-income earners. I guess we will see on November 23rd when Mr. Karteng sets out his medium-term fiscal plan. So how does the crashing pound affect you? Well, basically the crashing pound will hike up the price of imported goods, and companies may pass on these higher prices to consumers, which is going to worsen the cost of living crisis and increase inflation. The boss of Carlsberg has even warned the price of a pint could go up. If only Carlsberg did UK budgets. And no, I'm not sponsored by Carlsberg, but if Carlsberg or any other beer company fancies sponsoring me, I will never say no. Unfortunately, because the price of gas and petrol is based in dollars, these are going to cost more to import, as well as many other vital commodities. The UK imports 46% of the food it consumes, so food is also going to be more expensive. Technology like phones, laptops, clothes, or cars made abroad could get more expensive. Even things made in the UK may cost more if parts are bought from other countries. I don't know if any of you ever noticed how tech companies often did a direct conversion of the US dollar price of their goods to GBP, even when the USD was at like $1.30 or $1.50 to the pound. Well, I decided to take a look at this today. Is this the start that we are now paying more in pounds than they are in dollars, or has this been like this for a while? If anyone knows, please let us know in the comments below. You'd think they may have given us a break after overpaying all of these years, but it seems like no. Cheers, Apple. Anyway, in addition to this, a crashing pound also means going on holiday for us Brits is going to be more expensive, because the pound will buy you less of other currencies when exchanging your money. Inversely, it just got a lot cheaper for you Americans to visit the UK and other countries. Also, with the government planning to cut taxes, there are fears inflation won't be brought under control, which could mean even higher interest rates than originally planned. So financial markets are now betting on interest rates rising to 6.25% by next May, the highest since 2001. Raising interest rates could also increase the chance of us going into a recession. Raphael Bostic, who's a Fed official from the Atlanta Fed, even warned the tax cuts increase the risk of a global recession. Unfortunately, raising interest rates makes it more expensive to get a mortgage and makes repayments higher. Some mortgage lenders such as Virgin Money and Skipton Building Society even stopped offering mortgages on Monday while markets are so volatile. Almost 300 mortgage products were pulled from the market overnight on Monday. So as mortgages and loans get more expensive, it's going to leave people with even less money once again. But it's not all bad. A weak pound can, however, boost businesses which export to other countries as their goods become cheaper and more attractive to foreign buyers. That's great for all the normal people like me and you. So how does a crashing pound affect stocks? Because the pound is falling, the US dollar is skyrocketing. If you live in the UK and invest in US stocks, then this just got a hell of a lot more expensive to buy US stocks. On the flip side, if you already own a lot of US stocks, then the GBP value of your holdings just went up massively. But the US dollar skyrocketing also causes an issue for stocks, especially growth stocks, because more than half of the S&P 500 stocks revenue comes from outside of the US. And the foreign earnings will eventually have to be converted back into dollars. And if the dollar is strong, then you're able to buy less dollars when converting these earnings back, and so affecting earnings. Plus, when you have some outsider events like this, in a delicate market, it may lead to something else potentially going wrong. So let us know below how you have been affected by the pound crashing, and if you think the pound's going to recover anytime soon. I'd love to know and read all your comments. So how are other currencies doing? Well, the pound has fallen more than 20% against the dollar this year, making it among the 20 worst performing currencies. The euro has fallen against the dollar by 15% over the same period, and the currencies have reached parity for the first time in over 2 decades. The pound is also down against the euro over the same period. The dollar has performed well against other currencies this year. This is partly down to the US being less exposed to the high energy prices caused by Russia's invasion of Ukraine. Plus, they aren't pussyfooting around and raised interest rates by 0.75 basis points last week, while we have higher inflation and only raised by 0.5%. The dollar has done well over the last few years as America's economy has fared well post-COVID, and the US dollar is also the world's reserve currency, which is almost like the world's default currency. So financial institutions tend to hold large quantities of it, and many global transactions are carried out in dollars, like oil and gas, as mentioned before. And also, in a time of uncertainty, there is always demand for dollars, as you can always buy lots of things with them, and they are seen as a safer haven currency. Anyway, hopefully I have answered the question of why is the pound crashing, but you're probably now realizing that you're going to need to make your money go further to deal with the worsening cost of living crisis. And I have some amazing tips you need to see in this video right here, so make sure you watch that next.